Hello, hello. Happy Tuesday as we get ready for this short live. Hello, hello. Happy. So I stated that we're going to start at 2 o'clock Eastern time. So one more minute, and I'm excited to share about um, self-employment and getting ready for financing. So thanks for joining. Okay, let's start on time. It is 2 o'clock Eastern. And I just want to start with this crystal ball. So my name is Christelle. A lot of people say Crystal. It's actually Christelle, E-L at the end. And predictions, right? So a lot of people go with the predictions of what the market is going to look like. It does feel more secure when we have a feel of what things are going to look like in the future. It gives a little bit more confidence and certainty. And unfortunately, that is not the case with mortgage rates. We don't know for sure what's going to really happen. And a lot of people think, and the general consensus is, oh, feds are making a change that means directly impact on the mortgage, and that is not accurate. The mortgage rates are affected or impacted by other factors like inflation, the economy in general. And interestingly enough, when we had the news on the market about the rates dropping by the Fed by 0.5 point, the assumption is that means mortgage rates dropped also 0.5 point, and that's not true. Now, we did see a good improvement with the prime rate, which is tied to a lot of second mortgages or liens that people are getting when they have the first or second, or just as a line of credit to their home without necessarily having a first. And that did drop. Prime rate dropped to 8%. It was 8.5. So the Fed, when they are making their changes on their rate, is based on it's impacting more of your car loans, your credit cards, your short-term loans compared to your 30-year mortgage. That's more backed by the mortgage-backed securities. And it does have an impact, right? Because it gives us sentiment. It changes how people feel in the economy, but it's not that direct impact. The reason why I bring the crystal ball is that we can have predictions. And some of the facts, I'm going to go ahead and share my screen of let's just go with this article here. Hopefully you can see. Okay, I chose this article, Forbes, how low might mortgage rates go as the Fed cuts rate. So this was actually as of yesterday. I'm so sorry, there's so many advertisements around it. The expectations. So current 30-year mortgage rates reflect fixed income. That's not really the section I wanted to read. This is actually a section. Not really. What to expect. From here, the key questions for the mortgage market will have that is the long-term neutral short-term rates. The current expectation is that short-term rate is around 3%, according to both market and Fed policy. Of course, mortgage rates build in a premium of risk-free rates as lending to individual is riskier, more complex than lending to government. So that's what the Fed fund rate is. It's more for banks in between each other, what they lend to each other and the institutions. So current expectations are that we may see more short-term interest rates of about 3% by late of 2025. Now, again, this has an impact more on the prime and the line of credits. So mortgage rates were over 8% in November 2023, almost a year ago, right? And we've seen some improvements and it's been declining. So we've been seeing in the sixes since July, August. So we've been seeing the effect of what we predicted or were expecting with the rates. Now, just wanted to tell you about the rates. We can't really control that, you and I, directly, but we can definitely work on more on self-employed. So if you are self-employed, a lot of times you think, oh, I have to show tax returns where my net, not the first line of my gross income, but my net income is XXX in dollars, right? And then we take an average of that net profit. So if you are self-employed Schedule C, meaning you don't have a corporation, you don't have a K-1 and all those a little bit more complex taxes, a simple one. Go to your Schedule C, look at line 31, and that will be your net profit. That income is what we use to average about 12 months, really is 24 months, because you usually have to be self-employed for 24. There are usually exceptions to a lot of those guidelines, but in general, it's 24 months minimum. But a lot of clients who are self-employed do not qualify, or I'm not able to qualify because they have the exemptions. They have all the expenses that are deducted to reduce the amount to bring to the table. Now, I'll tell you, you got to choose. So now that you're not paying the IRS as much as you potentially would if you were W-2, the flip side is you'll have to bring more money to the table. You're not going to have a 3% down program on a bank statement. It's minimum usually going to be about 10%. But instead of paying the IRS, now you're using that money and investing it into real estate. Now, I'm not saying one way or another. I'm just using comparison. Talk to your accountant. So now you have a 10% down using bank statement program. It's what we call riskier because we're not looking at what you're actually making from what you report to the IRS with all the normal guidelines. So that also means your interest rate is going to be higher. That's why I started with a prediction, because as rates are going to sixes, self-employed may still be, it will most likely be higher than the ones who are providing W-2s and tax returns. So you have options though. You're not paying the IRS but as much, but you are now putting into your investment. You can do that for your primary residence using bank statements, investment properties, as well as a second home. A second home is a property you are going to be occupying at least 10 days out of the year. So if this is a property you're going to be renting for 365 days, it is not a second home. It's an investment property. Okay. Owner occupied, self-employed. There are programs like 12 months bank statements. You can use personal or business. I highly encourage you, prepare your business bank statements because it's easier on you, on all of us. If it's easier on you, it's easier on us as well, right? Because that's going to be income coming into your business. When you go into your personal, you're going to start having more of your personal deposits, somebody giving you cash or other things that we might not be able to use. Another key thing, try to use as many documentable deposits so that we can really see a trend of what you're depositing. So what we're going to do, we're going to look at your 12 months bank statement deposits. We're going to look at the deposits as well. If something that's unusual or something that's not from normal, what your line of work is, then your all that is being analyzed. We'll look at your deposits and calculate 20. I lost my connection, but I'm back on. Okay, so when it comes to the ownership, minimum 25%. Let's say you're 100% owner, we'll take the deposit. Let's say we can qualify you based on 50% of what you're depositing. So we're still going to calculate what's called your debt to income ratio. That's your capacity against your debts. And then let's say you really, that 50% is really your expense ratio. That means for what you do, what your business does, how much does it actually cost to go ahead and run the business on a day-to-day basis. So if it's you work from home, you work online, you don't really have big expenses except maybe your laptop and your internet. So it might be a lower cost. So minimum, very often we want 10% of ratio, expense ratio. Sometimes we can do it less if your accountant can actually confirm that yes, your expense ratio is da 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 da, da percentage. So we'll take a percentage of your deposits and that becomes your income. From there, we will calculate your debt to income ratio. So again, you have options as a self-employed, but I want you to be ready and start depositing the money into your bank account, business bank account. Try not to have in both. Also, the transfer between personal and business and other accounts, we usually don't take those unless you can justify that's truly an income, but we don't use those. So you have an option with the bank statement. If you're an investor and you don't want to use bank statement program, you can do it based on the property cash flow. So that means the property rents for $2,000 a month and your mortgage, taxes, and interest included is no more than $2,000. There are again exceptions of what that numbers will look, just make it as simple as possible. So now we qualify with your credit, qualify with your funds available to purchase. This is usually investment, 20% down, usually. And then you have, we don't look at your actual income coming in for your personal income. We use your property, future property cash flow. And that is called the DSCR program. So there are amazing opportunities. I want to share this with you as the market is about to shift again. We are on constant shifts. Be open to the shifts. Start moving your, I might have the next prop on the chessboard, right? Be ready to move on the board, but be ready. Be ready means your credit, your income, your documentation of the income, as well as your assets. Now, I want to do a quick sideline on assets. This is not for self-employed. This is not for investment properties, it's for owner-occupied. We have an amazing program. If you are on social media and you like to share about your life and you're an entrepreneur, guess what? There is a program called Home Funded. You can basically get people to help you with your down payment by saying, go fund me on my home purchase. This is my goal. This is my intention. I will love your support, da 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 da, however you want to promote that. So check out our Home Funded program. Okay, don't want to make it too long, but please comment if this was helpful for you, that you have as a self-employed opportunities to purchase, and book a time with me. Let me know, or let's connect so I can let you know what you need to work on if you're not ready. You have to be in conversation with an expert in order to be ready, and not just YouTube and all those are great, but you need to get your numbers and understand those. I love to do Zoom calls so I can share with you what you need to work on so we can do that visual no matter where you are in the country. So look forward to connecting with you. I am trusting this information was helpful. I'm going to go ahead and give it a moment to see if there are any, as this is my beginning of doing lives. I know that people coming in might not be as much in comments, and I'm open to it. I'm going to go. One person is watching. I think that's actually me watching on the other side. So by the way, I love to have fun because I've been in the mortgage industry for over 25 years. And it can be heavy at times. So it's cool to have fun. Okay, so I'm going to actually have more fun. I'm going to stay on and leave it on. This is going to be beyond now. You know what I forgot to do is record. Oh my gosh, please laugh at me. I did through Zoom so I can record and have content. And I didn't do that, but I'll find a way. I want you to get to know me. And why do I want to get you to get to know me is I'll say I live in my little bubble. I'm in Mount Shasta right now, California. And there are so many opportunities, and I like to share from that space of possibilities, of the magical, no matter what's happening around us. We can acknowledge what's happening around us, and we can also take a stand, which is my stand, is to see love and beauty. And in order for me to see love and beauty, I have to become, and I am love and beauty. And I speak of beauty in a sense of the mountain, the painting, like really seeing the beauty in everything. Do you see beauty in everything? Or do we focus on what's not working? I've been there, trust me. And I enjoy more seeing the beauty in everything. And things do get heavy at times, which means um, I get triggered, I judge. They should have done it differently. Why are they asking it this way? But then I take a moment and say, you're judging, Christelle. So forgive yourself, let it go, and or acknowledge, or do the ho'oponopono. I'm sorry, I'm judging. Please forgive me. I thank you for showing me that I'm judging, and I love you. This is Ho'oponopono. Let's take it to the mortgage industry. So you can actually use that practice to center yourself. And let's say you've been trying to buy a home and it hasn't worked out because you the mindset, it all goes from your thoughts. What are your thoughts towards buying? And by clearing that, by forgiving. So I'm sorry, I haven't gotten to yourself. It might sound crazy, but just have it to yourself. Because we do have the self-talk inside, and we think it's only what we say with our mouth open. It's actually so powerful what's in here because it keeps on going, spiral, and the same thoughts. So I'm sorry, I haven't gotten a house yet. Please forgive me, my inner self, that I haven't taken all the necessary steps, or I've tried, and so far it hasn't worked. I'm willing to keep on because I'm committed to keep on trying, to keep on seeing where there needs light. Maybe my credit, taking new patterns in my mind of like, I do need to. Okay, disconnected again. I gotta see what's going on in this area. We're going to keep it no more than 22 minutes, so I'll be here for a little bit longer. Um, please forgive me. I haven't handled of my credit situations as I needed to. Don't hold to the guilt. Don't make yourself all crazy about it. Just acknowledging it and taking actions towards what would it take for me to actually pay my debts? What would it take for me to um, have my minimum payment? I am amazed how sometimes clients don't realize that late payment on a small credit card take them back 100 points. That one late payment, and sometimes it'll be $50. Like, why? Oh, I forgot, or I was so overwhelmed. So set up an automatic payment. As soon as you have a credit card that you open, set up the minimum payment to come out when you know you get paid. So you know at least the minimum is taken care of. We give our power ways where before it cut off is that we don't necessarily eat healthy, then we need medication. We don't necessarily work with our credit, then we need credit fixing company. There are issues with, fraud and all those. I don't take that away. I agree. And there are even preventions for those. So forgiveness of, I didn't handle things the way I could have. Now I have new information. Let me apply it. I love that I am consistent with the thought that I want to purchase a home. I want my credit to be stellar. I want to purchase a home for my family, for myself. So love on yourself so you can acknowledge it, apologize, and love on self. And definitely take time to connect with experts who are going to have the patience. I just had a call today with Erica. Erica is a client. I think it's been a year and a half since we've been working together. She's been under contract twice. The property that she's unfortunately picked have had roof issues, foundation issues. There's a pattern there. So I say, Erica, there's something to clear about your expectation of homes. You want them to feel a certain way, but is there a block? Releasing the block. Now, what does that mean, releasing the block? If my mind constantly think, or I experience in the past, family that they've always had issues when they own a home, that might be in my space. And that may encounter homes that only have issues. It's got to heal. I'm sorry, I've only focused on family members who've had homes where they always tell me they have this that breaks down, they have that. There's always issues that come in with a home. It is safer for me to just rent because then I can call the landlord. Once you clear that, once you release those thoughts that are holding you back from past patterns, you may not be aware of it, right? So you're having conversation with Christelle, like myself, who's aware of some of those things, to help you release those so that you can now take new steps. I did say 22 minutes. So I don't know if this has been updated, how long I've been on. 1 more minute. I'll leave you with this. I am a spiritual being living this experience with you. And that experience is me as a lender who is here to alchemize our thoughts, our patterns, so we can achieve the goal of home ownership as a first-time buyer, as well as a move-up buyer, as well as an investor. So allow me to be on this journey with you. I welcome the opportunity to connect with you. I welcome the opportunity to help you shift so that we can achieve that goal. I have a client who called me today. Get a chew. He trust me, loves my honesty, and that's what I want to do for you. Give you trust, somebody who will be transparent. I'm not saying I have all the answers. I'm not saying that I know it all, but I'll say I'll be honest with you with what I know and what I can share with you. But I'll first listen to what your needs are, and let's move in the direction that helps you get to your goal. As promised, 22 minutes into it, I want to say thank you for listening. As I'm getting used to sharing my thoughts, my heart on social media, on YouTube, and guide you. I'm going to be a little bit different than others, and that's my goal, is to be unique and only draw those who feel connected with the crystal ball that I bring from all the outside into the heart. Let's speak from our heart, from love of myself to you. Love of myself. What the heck does that mean, Christelle? Love of self to loving you. And may you experience an amazing day. And may this video be, I'm over 23 minutes. Goodbye, because I can speak. Oh my gosh. All right.